day, everyone. Welcome to the Apple Incorporated First Quarter Fiscal Year 2020 Earnings Conference Call. Today's conference is being recorded. At this time, for opening remarks and introductions, I would like to turn the call over to Tejas Gala, Senior Analyst, Corporate Finance and Investor Relations. Please go ahead.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expenses, taxes, capital allocation, and future business outlook. Actual results or trends could differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed periodic reports on Form 10-K and Form 10-Q and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information, which speaks as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thanks, Tejas. Good afternoon, and thanks to all of you for joining us. We're thrilled to report Apple's biggest quarter ever, which set new all-time records in both revenue and earnings. We generated revenue of $91.8 billion, which is above the high end of our guidance range, with revenue growth accelerating for the third consecutive quarter. Geographically, we set all-time records in the Americas, Europe, and rest of Asia Pacific, and saw Greater China return to growth. Our record performance was fueled by iPhone, where December quarter revenue was up 8% year over year, and by our fifth consecutive quarter of double-digit growth outside of iPhone, including a new all-time record for services and another blowout quarter for wearables. Our active install base of devices has now surpassed 1.5 billion, up over 100 million in the last 12 months alone, reaching a new all-time high for each of our main product categories and geographic segments. Not only is our large and growing install base a powerful testament to the satisfaction, engagement, and loyalty of our customers, but it's also fueling our growth across the board, particularly in services. Let's take each category one by one. On iPhone, revenue in the December quarter was $56 billion. Again, that's up 8% over a year ago, thanks to the exceptional demand for the iPhone 11, iPhone 11 Pro, and iPhone 11 Pro Max. In fact, iPhone 11 was our top-selling model every week during the December quarter, and the three new models were our three most popular iPhones. We had double-digit growth in many developed markets, including the US, the UK, France, and Singapore, and also grew double digits in emerging markets, led by strong performances in Brazil, mainland China, India, Thailand, and Turkey. These new models are by far the best iPhones we've ever shipped, with advanced technologies, an unprecedented leap in battery life to easily get through the day, and a best-in-class camera experience. We have been wowed with the photos customers have shared in our all-new Night Mode Photo Challenge this month. Turning to services, Q1 revenue reached $12.7 billion, an all-time record, growing 17% over last year. Once again, we saw double-digit growth in all five of our geographic segments and established new all-time records for multiple categories, including cloud services, music, payment services, and our App Store search ad business, as well as setting a December quarter record for the App Store and Apple Care. 2019 was a historic year for our services business, and I'd like to touch on some highlights. For the App Store, 2020 started off strong with customers spending a new single-day record $386 million on New Year's Day alone, a 20% increase over last year. Apple Arcade, our new game subscription service, has been fast off the blocks with a catalog of over 100 new and exclusive games you won't find anywhere else, all playable across Apple devices with new games and expansions added every month. Apple TV Plus is off to a rousing start and I want to congratulate the entire team at the morning show for their multiple Golden Globe nominations. Jennifer Aniston on her Screen Actors Guild Award and Billy Crudup on his Critics' Choice Award. We continue to focus on telling stories that matter, like Little America, which recently premiered to widespread critical acclaim with much more great content still to come. Apple News now draws over 100 million monthly active users in the US, UK, Australia, and Canada, and provides a curated and personalized experience using on-device intelligence to recommend stories. Apple News Plus continues to add new titles, offering subscribers seamless access to the world's top publications across all of their devices. For Apple Pay, revenue and transactions more than doubled year over year, with a run rate exceeding 15 billion transactions a year. Apple Pay Transit support expanded, with customers paying for journeys on Transport for London more easily with Apple Pay Express Transit. And in spring of 2020, iPhone and Apple Watch customers will be able to simply tap to ride trains and buses in even more cities, including Shenzhen and Guangzhou. We are thrilled with the continued growth of Apple Card, and last month customers began using Apple Card monthly installments at Apple Retail and online to purchase new iPhones and pay for them over 24 months. We see great promise for these recently launched services, and we're optimistic about what we've got in the pipeline for each of them. Now turning to wearables, we had another incredible quarter, setting an all-time record in virtually every market we track around the world, and this product category is now the size of a Fortune 150 company. Demand for AirPods continues to be phenomenal, particularly for our recently launched AirPods Pro, our new addition to the AirPods family that features active noise cancellation. Apple Watch had a great start to fiscal 2020, setting an all-time revenue record during the quarter. It continues to have a profound impact on our customers' lives, and it continues to further its reach, as over 75% of the customers purchasing Apple Watch during the quarter were new to Apple Watch. Both AirPods and Apple Watch were must-have holiday gifts, helping drive unprecedented results for the category, even as we face supply constraints for Apple Watch Series 3 and AirPods Pro. Mac and iPad generated $7.2 and $6 billion in revenue, respectively, and the high level of customer satisfaction and loyalty for both products drove the active install base of both Mac and iPad to new records in all geographic segments. For iPad, we saw growth in key emerging markets like Mexico, India, Turkey, Poland, Thailand, Malaysia, the Philippines, and Vietnam. With our current lineup of iPad Pro, iPad Air, iPad Mini, and iPad, along with the new iPad OS, we give customers an unparalleled tablet experience integrating hardware, software, and services in a way that only Apple can. This was also a very exciting quarter for the Mac as we launched our most powerful notebook ever, the 16-inch MacBook Pro, as well as Mac Pro and Pro Display XDR, the most powerful tools Apple has ever put in the hands of pros. And we've already seen a strong response from the pro community, from developers, photographers, and music producers to filmmakers and scientists who rely on the Mac to create their life's best work. We also want to take a moment to congratulate all the Grammy-winning and nominated artists this past weekend who rely on Logic Pro 10 and their Mac to create incredible music we all love. I want to call out and celebrate the exceptional work of our retail and online teams. This quarter, we opened a beautiful new store in Kawasaki, Japan, and exciting things are taking place inside each and every store. Thanks in part to a doubling in iPhone trade-ins versus last year, our retail and online stores set an all-time record and delivered strong double-digit growth in iPhone. We see a very bright future for these efforts, and we continue to innovate to ensure that everyone who visits an Apple retail location has a great experience. We began 2020 with our greatest product lineup ever, and we are only deepening our commitment to do our part to make the world a better place. In November, we released a completely redesigned Everyone Can Code curriculum to help introduce more elementary and middle school students to the world of coding. The new curriculum includes even more resources for teachers, a brand new guide for students, and updated Swift coding club materials. Today, millions of students in more than 5,000 schools worldwide use Everyone Can Code curriculum to bring their ideas to life and develop important skills, including creativity, collaboration, and problem solving. November also saw the launch of our new research app, the latest in our ongoing effort to put the future of health in the hands of every user. Customers in the US can enroll in 3 landmark multi-year health studies that we're undertaking with leading academic and research institutions. The Apple Women's Health Study, the Apple Heart and Movement Study, and the Apple Hearing Study. As in everything we do, we built user privacy into the research app from the ground up. This quarter, we also announced a $2.5 billion plan to help address the housing availability and affording crisis in our home state of California. We feel a great responsibility to help the region we have always called home stay vibrant and to ensure that it remains a great place for everyone to live and raise a family, including those who do so much to serve the community, like firefighters and teachers. In much more recent news, we're closely following the development of the coronavirus. We're donating to groups that are working to contain the outbreak. We're working closely with our Apple team members and partners in the affected areas, and our thoughts are with all of those affected across the region. As we close the books on a record-breaking December quarter, we are already well underway on some new and exciting plans for the future. Apple's strength will always be its boundless creativity and innovation, and this year will be no different. But for now, for more details on the results, I'd like to turn the call over to Luca.
Thank you, Tim. Good afternoon, everyone. Our business and financial performance in the December quarter were exceptional, as we set new all-time records for revenue, net income, and earnings per share. Revenue for the quarter was $91.8 billion, up $7.5 billion or 9% from a year ago, in spite of a $1 billion headwind from foreign exchange. Geographically, we established all-time revenue records in many major developed and emerging markets, including, among others, the US, Canada, Mexico, Brazil, the UK, Germany, France, Italy, Spain, Poland, Thailand, Malaysia, and Vietnam. Products revenue was $79.1 billion, up 8% as iPhone returned to growth, and we had incredibly strong results in wearables, where we set all-time records for both Apple Watch and AirPods. Services revenue grew 17% to a new all-time record, $12.7 billion, with double-digit growth in every geographic segment and new all-time records across our portfolio. Company gross margin was 38.4%, up 40 basis points sequentially, driven by leverage from higher revenue in spite of a negative 60 basis point impact from foreign exchange. Products gross margin was 34.2%, up 260 basis points sequentially, thanks to leverage and favorable mix. Services gross margin was 64.4%, up 30 basis points sequentially, driven by favorable mix. Our reported tax rate for the quarter was 14.2%. Before discrete items, the rate was 16.5%, exactly in line with our guidance. A favorable one-time item impacted the rate by 230 basis points. Net income was an all-time record at $22.2 billion, up $2.3 billion or 11% over last year. Diluted EPS was also an all-time record at $4.99, up 19%, and operating cash flow was a very strong $30.5 billion, an improvement of $3.8 billion over a year ago. Let me get into more detail for each of our revenue categories. iPhone revenue of $56 billion grew 8% year over year, as we saw great customer response to the launch of our newest iPhones. We set all-time revenue records in several countries, including the US, Mexico, the UK, France, Spain, Poland, Thailand, Malaysia, and Vietnam. Our active installed base of iPhones has reached an all-time high and is growing in each of our geographic segments. In the US, the latest survey of consumers from 451 Research indicates iPhone customer satisfaction of 98% for iPhone 11, 11 Pro, and 11 Pro Max combined. Among business buyers planning to purchase smartphones in the next quarter, 84% plan to purchase iPhones. Turning to services, we set an all-time revenue record of $12.7 billion with double-digit growth in all of our 5 geographic segments. As Tim mentioned, we established new all-time records for Apple Music, cloud services, payment services, and our App Store search ad business, and December quarter records for the App Store and Apple Care. We are well on our way to accomplishing our goal of doubling our fiscal year 16 services revenue during 2020. We've actually already reached that goal on a run rate basis with the results of the December quarter. Customer engagement in our ecosystem continues to grow, and the number of both transacting and paid accounts on our digital content stores reached a new all-time high, with paid accounts growing double digits in all of our geographic segments. We now have over 480 million paid subscriptions across the services on our platform, up 120 million from a year ago. And at this point, we expect to hit our goal of surpassing the 500 million mark already during the March quarter. Given the tremendous momentum we are experiencing across our services offerings, we are increasing our target for paid subscriptions and aim to reach 600 million before the end of calendar 2020. App Store revenue grew strong double digits thanks to robust customer demand for both in-app purchases and subscriptions. Our third-party subscription business grew across multiple categories and increased almost 40% year over year. Our first-party subscription services also continue to perform extremely well. Apple Music set an all-time revenue record, offering a catalog of over 60 million songs to our customers. iCloud also generated an all-time revenue record, growing very strong double digits while offering our customers a safe, secure, and seamless experience across all their devices. It was a December quarter record for Apple Care, thanks to strong service agreement attach rates and expanded distribution. Many of our partners have come to appreciate the strength of the Apple Care brand and our ability to deliver the very best service and support in the world. That value resonates with both our partners and our customers, and we're very happy to see that quality of experience delivered to more and more of our users. Next, I'd like to talk about Mac and iPad. Mac revenue was $7.2 billion and iPad revenue was $6 billion. Both products had a difficult year-over-year comparison due to the launches of MacBook Air, Mac Mini, and iPad Pro during the December quarter a year ago and the subsequent channel fill. Despite the tough compare, on a demand basis, our performance for both Mac and iPad was around even to last year. Importantly, around half of the customers purchasing Macs and iPads around the world during the quarter were new to that product. And the active install base for both Mac and iPad reached a new all-time high. The most recent surveys from 451 Research measured a 93% customer satisfaction rating for iPad from consumers and 92% from businesses. And among both consumers and businesses who are planning to purchase tablets in the March quarter, 78% plan to purchase iPads. Wearables, home, and accessories established a new all-time record with revenue of $10 billion, up 37% year over year, with very strong double-digit performance across all 5 geographic segments and growth across wearables, accessories, and home. We set all-time records for wearables in virtually every market we track, even as we experienced some product shortages due to very strong customer demand for both Apple Watch and AirPods during the quarter. We also continue to see strong demand for our products in the enterprise market as our technology solutions enable businesses to do their best work. 100% of Fortune 500 companies in the healthcare sector use Apple technology in areas such as patient experience, clinical communications, and nursing workflows. And we're also seeing smaller companies in this sector drive innovation with our technology and apps. One example is Gauss Surgical, which uses Core ML in iOS to more accurately estimate blood loss during childbirth and surgery. This helps clinicians have more complete and timely information on whether a patient needs an intervention, which can impact both clinical outcomes and costs. Another example is Butterfly Network, a medical imaging company which makes a handheld ultrasound device that connects to iPhone or iPad to enable clinicians to take an ultrasound anywhere at a cost that is dramatically lower than other solutions on the market today. Let me now turn to our cash positions. We ended the quarter with $207 billion in cash plus marketable securities. We issued a 2 billion euro denominated green bond, retired $1 billion of maturing debt, and reduced commercial paper by $1 billion during the quarter, leaving us with total debt of $108 billion. As a result, net cash was $99 billion at the end of the quarter, and we maintain our target of reaching a net cash neutral position over time. We returned nearly $25 billion to shareholders during the December quarter. We began a $10 billion accelerated share repurchase program in November, resulting in the initial delivery and retirement of 30.4 million shares. We also repurchased 40 million Apple shares for $10 billion through open market transactions, and we paid $3.5 billion in dividends and equivalents. As we have done for the last several years, we will share our plans for the next phase of our capital return program when we report results for the March quarter. Finally, as we move ahead into the March quarter, I'd like to review our outlook, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. We expect revenue to be between $63 and $67 billion. The wider than usual revenue range comprehends uncertainty related to the recently unfolding public health situation in China. We expect gross margin to be between 38 and 39%. We expect OPEX to be between $9.6 and $9.7 billion. We expect OI&E to be about $250 million, and we expect the tax rate to be about 16.5%. Also today, our board of directors has declared a cash dividend of 77 cents per share of common stock, payable on February 13, 2020, to shareholders of record as of February 10, 2020. With that, let's open the call to questions.
Thank you, Luca. We ask that you limit yourself to 2 questions. Operator, may we have the first question, please?
Yes, that will be from Amit Daryanani with Evercore.
Thanks a lot. Good afternoon, guys. I guess first one for me, on wearables, fairly impressive to see it's already a $10 billion business for you guys. Can you just touch on the growth that you see on the wearable side? How much of the growth do you think is coming from first-time buyers of AirPods or Apple Watch versus folks that seem to be just upgrading the products that they have? Because it looks to us the adoption rates are fairly low in your install base, so there should be a long runway, but I'd love to just understand how you see that growth divide up between those 2 buckets.
Yeah, Amit, it's Tim. If you look at the Apple or the wearables as a category within the wearables, home, and accessories revenue, wearables grew 44%, so it was very strong, as you say. The both Apple Watch and AirPods did very well in terms of collecting new customers. Apple Watch in particular, 75% of the customers are new to the Apple Watch, And so it's still very much a selling to new customers at this point.
Perfect. And I guess, Luca, you could just touch on gross margins. The March quarter guide, I think, implied gross margins are flat to actually up 10, 15 basis points. It's rare for you guys to actually guide gross margins up in March, I think, because you have a fairly high seasonal sales deleverage happening. So what are the offsets that's enabling what looks like a better than seasonal guide for gross margins?
Yes, that's right. I mean, it's about flat sequentially, and by the way, significantly higher on a year-over-year basis. But on a sequential basis, you're right. On one side, we've got the loss of leverage from the usual seasonality, but we expect that loss of leverage will be offset by better mix and cost savings.
Thank you, Amit. Can we have the next question, please?
That will come from Tom Forte with D.A. Davidson.
Great. Thank you for taking my question. So congrats on the launch of Apple TV+. I wanted to know internally how you were gauging success. Is it purely on critical acclaim? Is it on number of consumers that are using the service, contribution of service to revenue, et cetera, et cetera? Thank you.
Hey, Tom, it's Tim. We are primarily measuring ourselves on the number of subscribers. As you can tell from the way that we launched the product, we started with a very aggressive price at $4.99. And in addition to that, we have our bundle where if you buy pretty much any device, you're getting a year for free. And so we're very focused on subscribers. That said, the product itself is about storytelling. And we think if we do that well, then we'll find that there will be some number of those that will also be critically acclaimed. And we're seeing that with The Morning Show. We're seeing that with Little America and others.
Great. And then my second question is, I think you indicated that last month you started offering consumers the ability to use their Apple Card to buy an iPhone on an installment basis. Can you talk about how that's had an impact on your unit sales for iPhones?
The retail stores did fantastic on iPhone. Very strong double-digit growth in iPhone from a year-over-year point of view. And one of the factors that enabled that was the getting to monthly payments on the Apple Card to make it very simple. Of course, that's U.S. only at this point, but the U.S. is a very key market for us, and so it was an important part of it.
Thank you, Tom. Can we have the next question, please?
That will come from Shannon Cross, Cross Research.
Thank you very much. I wanted to go back to revisit China. Tim, can you talk about what you're seeing in the region, what you were seeing in the region prior to the health crisis? And then can you also update us a bit in terms of your manufacturing strategy, dual sourcing, geographic diversification, even within the region, just so we have some idea of how this will be managed? Thank you.
Yeah, thanks, Shannon. In terms of China, the results from last quarter, and then I'll get into the coronavirus in a second. For the results from last quarter, we had double-digit growth for iPhone in mainland China. So that was an important change from where we had been running. We also had double-digit growth in services in mainland China, and we had extremely strong double-digit on wearables. And so really there were a number of different factors. In terms of the things that customers are responding to, iPhone 11 is doing particularly well there. The product has been very well received with its battery life, and the camera is unbelievable. We also, as you probably know, have certain trade-in programs going and financing programs. These have also been well received. And so it's sort of the sum of all of this, and we're attracting quite a large percentage of new customers on products like the Mac. 3/4 of the customers buying a Mac in China are new, and nearly 2/3 of the customers buying iPad are new. And so it was a terrific quarter. We had 3 of the top 4 selling smartphones in urban China, according to Kantar. In terms of the coronavirus, as I mentioned earlier, first and foremost, our thoughts are with all of those that are affected across the region. And as I mentioned, we're donating to groups that are working to contain the outbreak. We're also working very closely with our team and our partners in the affected areas, and we have limited travel to business critical situations as of last week. The situation is emerging, and we're still gathering lots of data points and monitoring it very closely. As Luca had mentioned, we have a wider than usual revenue range for the second quarter due to the greater uncertainty. I'll talk about supply chain and customer demand some to give you some color. With respect to the supply chain, we do have some suppliers in the Wuhan area. All of these suppliers, there are alternate sources, and we're obviously working on mitigation plans to make up any expected production loss. We factored our best thinking in the guidance that we provided you. With respect to supply sources that are outside the Wuhan area, the impact is less clear at this time. The reopening of those factories after Chinese New Year has been moved from the end of this month to February 10th, depending upon the supplier location. And we've attempted to account for this delayed startup through our larger range of outcomes that Luca mentioned earlier. With respect to customer demand and sales, we've currently closed 1 of our retail stores, and a number of channel partners have also closed their storefronts. Many of the stores that remain open have also reduced operating hours. We're taking additional precautions and frequently deep cleaning our stores, as well as conducting temperature checks for employees. While our sales within the Wuhan area itself are small, retail traffic has also been impacted outside of this area across the country in the last few days. And again, we have attempted to account for this in our guidance range that we've provided you. I hope that gets you some color.
Yeah, no, that was really helpful. Luca, maybe if you could just touch on, from a gross margin perspective, the commodity pricing environment and availability. Obviously, there's been some movement on DRAM and NAND. So if you can talk about how you're thinking about inventory levels and managing that going forward. Thank you.
Yes, as I said earlier to the question around the gross margin guidance for the March quarter, we are seeing a benign commodity environment. Most commodities have been declining during the December quarter, and we expect the same to happen in the March quarter. As always, and as you probably know, we look at the way these prices move, and at times when we feel it's appropriate, we buy certain commodities in advance. And so we will continue that practice as we go through the year.
Thank you, Shannon. Can we have the next question, please?
That will come from Katy Huberty with Morgan Stanley.
Thank you. Good afternoon. Luca, can you address the modest slowdown in services growth this quarter, 17% versus 18% in September? Which services categories accelerated versus where did you see some deceleration in the growth?
Katie, let me make a couple of comments here. The 17% during the December quarter, we look at it against our fiscal year 19 growth rate,